A very good evening to all of you who have joined our webinar today. I am Tilini Navaratna, a lecturer attached to the Department of Business Economics. On behalf of the department, let me take the privilege to give an opening to this webinar on the Sri Lankan economy and the way forward amidst COVID-19. We here at the University of Sri Jayewardenepura consider discussions and debate on the current topics essential for the progress of a nation. Henceforth, the Research Center for Business Economics and Development Studies has organized a panel discussion to stir up conversations with the industry experts and academia. Before we commence any formal proceedings, let us take time to pay tribute to our alma mater, the University of Sri Jayewardenepura.
Lanka pinbar randirane Srinivas Mahaganagare Sri Jayewardenepura Sarasari Sri Namaya Randhavam Lomudune Kadure Siri Sumagul Samidun Vigikala Vidyodaya Vidudimalun Eliyen Magasarasau Sri Lanka Pindar Randirane Srinivas Mahaganagare Sri Jayewardenepura Sarasari Sri Namaya Randhavam Lomudune Ayuktiyedi Vivadashili Asatyedi Vicharashili Viyat Sabhamed Samajashili Viyatun Vidaya Bhogayav Sri Lanka Pinbar Randirane Srinivas Mahaganagare Jayewardenepura Sarasari Sri Namaya Randhavam Lomudune Vidya Uppatatan Setta Vidya Uppatatan Setta Vidya Uppatatan Setta
Thank you, everyone. In order to begin the day's proceedings, I would like to cordially invite Dr. M.A. Keshriyalata, the Director, Research Center for Business Economics and Development Studies, to deliver the welcome address.
Thank you, Siri. Very good evening to all of you, distinguished panelists, head of the departments, colleagues, students, ladies and gentlemen. As the director of the Research Center for Business Economics and Development Studies, I am very honored to welcome you all for the first webinar on Sri Lankan economy and the way forward amidst COVID-19, which is organized under the Research Center of the Department of Business Economics, Faculty of Management Studies and Commerce, University of Sri Jayewardenepura. The Department of Business Economics was established in 2002 with the mission of create and disseminate knowledge for prosperity. In line with this broader perspective, as a department, we have been continuously working towards achieving this, and we took another step by introducing the new research center for the department recently. One of the objectives of this center is to disseminate and share knowledge about contemporary issues in economics with our students, undergraduate as well as the postgraduate, and with academia and industry experts as well as with others. And to achieve this objective, we initiated to organize The series of discussion on COVID-19 impact on overall economy as well as at the micro level. In line with this intention, we invited three key personnel from the Central Bank of Sri Lanka and from the industry for the first event. Then with this introductory comment, let me warmly welcome the prominent key panelists for our discussion. The first, I warmly welcome the Dr. Wanaguru, the Additional Director, the Economic Research Department, the Central Bank of Sri Lanka, for kindly accepting our invitation. Next, we are extremely grateful and would like to welcome Mr. Qadhir, the Associate Director, the leading equity research projects of Acuity Knowledge Partners, who has agreed to participate as a panelist for this forum. We also wish to extend a warm welcome to Mr. Tushara Jayaratne, the Director, External Relations and Capital Market Education, Security Exchange Commission. So, since the panelists from the various industries is a blend of expertise from different sectors, we hope that this will be an interesting and great opportunity for all of us. And I would like to express my sincere gratitude for our Vice Chancellor, University of Sri Jayewardenepura, the Senior Professor Sudanta Liyanage, and the Dean, Faculty of Management Studies and Commerce, the Professor P.D. Nimal, for their valuable support. And I am honored to welcome the moderator of this event, the Professor Kumarasinghe, and we sincerely thank for gracing this occasion as the moderator. Next, I would like to cordially welcome all the head of the departments and panel of lecturers of the Department of Business Economics, as well as other lecturers from our faculty. I also wish to extend my cordial welcome to the representatives from the industry and also alumni members of the Department of Business Economics. Thank you for all being with us with your busy schedule. A special welcome is indeed to the postgraduate student and our undergraduate students of the department. Then, ladies and gentlemen, we hope and wish this will be an enjoyable and enriching experience to all of you. And have a wonderful evening. Thank you very much.
Thank you, Madam, for those welcoming remarks. Let us now move on to yet another address by a senior leadership of the department. Well, it is none other than our head of the department, Dr. Dinesha Sirivardhana. Madam, we all cordially invite you to address our webinar today.
Good evening to all of you. As the head of the Department of Business Economics of the Faculty of Management Studies and Commerce, University of Sri Jayewardenepura, I consider it's a privilege to address this forum today. As we established the Research Center for Business Economics and Development Studies, we had the prime focus of disseminating knowledge with important groups of the people like academia, industry, as well as the general public. So this forum, which is about to commence in few minutes, is one of the biggest steps towards getting closer to our prime focus. So today we have selected a theme which is utmost relevance to all sectors of the economy, as well as each and every individual of the country and at the global space also. So I hope all our participants would make the maximum use of the insights shared by our panelists today. So I encourage the audience, especially our students and undergraduate and graduate students, to take this opportunity to ask questions and engage in this fruitful discussion. So at the same time, I wish to highlight that the contribution made by our distinguished panelists, it's not only a contribution towards the department and university, but a contribution towards the development of the entire nation. Henceforth, as the head of the department, I'm grateful towards our panelists for taking the time of their busy schedules to be here with us. I wish you all a productive and insightful session. Thank you.
Thank you, Madam, for those encouraging words. I would like to take a few minutes to brief on the flow of the panel discussion, as well as to give some instructions to our dearest participants. First and foremost, we would request all the participants to keep your microphones on mute all the time, unless and otherwise you are asking a question, and this is only during the question and answer session. The panel will take place in 3 rounds. In the first round, the moderator will set the scene for discussion, which will be followed by introductory speeches by the 3 panelists, and each panelist is allocated 10 minutes. The second round is the question and answer session, in which the participants are given the opportunity to ask questions. However, you have to note that the questions have to be directed first via a Zoom conversation, and it can be directed to Miss Amanda Pereira, who is one of the in the participant list, and few selected questions will be directed to the panel. We will request the person posting the question to ask the question from the panelist. So therefore, we strongly encourage the people who are sending questions to turn on their video camera while they're asking the question, so that we make the panel discussion quite interactive. And also, it would be nice if you could introduce yourself, tell us who you are, from where you come from, a bit before you ask the question. Thereafter, the round 3 will be a wrap-up session, where the panelists will be given 2 minutes each to do a briefing. Having briefed on the flow of the forum, let me take this opportunity to introduce our distinguished panelists. Starting off with Dr. Sumila Wanaguru. Dr. Wanaguru is a senior economist attached to the Economic Research Department of the Central Bank of Sri Lanka, and she is currently serving as the Additional Director of the Economic Research Department. She holds a PhD in economics from the Australian National University. Dr. Wanaguru is also a qualified lawyer. Secondly, let me introduce Mr. Qadhir Sharif. He has been with Acuity Knowledge Partners for 10 years and is an associate director. He's also the head leading equity research projects for the firm in Colombo. In addition, he plays an active role in the development of Acuity strategic initiatives. He holds a bachelor's in accounting, finance, and management from the University of Nottingham. Next, I wish to introduce Mr. Tushara Jayaratne, the Director, External Relations and Capital Market Education of Security Exchange Commission. He possesses more than 25 years of capital market experience. He joined the Colombo Stock Exchange as a management trainee in 1995, and since then he has held many distinguished positions. He has also authored the book Jayewardenepura on investing in the capital market. Last but not least, let me introduce a very important person for today's session. He who is a very senior academic within the university. He is none other than our Professor Dr. Jana Kumarasinghe. Professor Kumarasinghe holds a PhD from the Ritz-Muken Asia Pacific University, Japan. He has a strong research backing as well as many years of administrative exposure. Dear sir, we warmly welcome you as the moderator to this session, and I invite you to take over the panel discussion.
Okay, thank you, Tilini Navaratne. One of our proud product from the same department where we all have attached to the and this today's the conference is an untiring effort of the our department research center. Really, I appreciate all the people who have made this event a success. I know that the wheels start rolling, I think, few months ago. We had initially decided, a date, but we have to postpone it due to this COVID impact. Right. Anyway, at last we were able to happen in this event in this beautiful evening. And also today, if we pay our attention to our panelists, they have, we are having heavyweights in their fields. Dr. Sumali Wanaguru, it's a senior economist, Economic Research Department, Central Bank of Sri Lanka. That's when we have a person from the macro policy making, who is really involved in, shaping the macroeconomic policies of this country. And also Mr. Qadhir Sharif, Acuity Knowledge Partner, Associate Director, Equity Research Project, who is really a practitioner. So we will get his views and his knowledge that would be really will benefit for our students as well as all the intellectuals who take part this event today. And also Mr. Tushara Jayaratne, Director External Relations and Capital Market Education, Security Exchange Commissions, who represent the private sector. So we all know how important the capital market and its contribution for a country. So definitely we could get views on Tushara Jayaratne as well. So today's our topic is Sri Lankan economy and the way forward amidst COVID-19. So before getting to the topic, I would like to take my privilege to give a little insight on the Sri Lankan economy. Right. So if we pay our attention to the economic growth rate, which is a very good indicator and very good starting point of this discussion. So even just before the COVID also, what I want to tell, we didn't have a much strong economic growth rate when we compare it with the Asian or the other part of the world. So this is right after the COVID impact. So you all could see the screen now, even we are slightly ahead of the Pakistan. Our economic growth rate, the early of this year, that was 2.3. And the Bangladesh, where there was no Bangladesh when we got the independence, now they are the leading economic growth rate, that is 8.2%. Okay, these are the predictions we had at the beginning of the COVID. Right. So, but we all know that when we got the independence, that was in 1948, we had the strongest economy in Asia. So now you all know where we are, what our place is in Asia, even the South Asia. We are slightly ahead of Pakistan. Even Afghanistan is much ahead than Sri Lanka, unfortunately. Right. Here today, we are not going to have a post-mortem, what has happened, who is responsible for these things? No. We want this country to lift at least, further from this point where we are having today. But for that, we should have and understand what has happened to our economy. So if you get this slide, you could see little various indicators, what has really happened to us. Even if gross national reserves, we are having the worst reserves even in South Asia, forget about the other part of the world. And most of the indicators are not having a good sign for us in the economy. The reason for this is, so if we pay our attention to the economic growth rate, not only the Sri Lanka, the other part of the world, after this COVID impact, all are expecting a negative growth rate or is having a negative growth rate at the moment. The prevailing economic growth rate, most of the countries is having a negative growth rate. But given that, if we able to combat the COVID, or in a way, if we able to find a vaccination for this one, most of the countries in the world is having a positive look on the economies, and they are expecting to take their countries forward and expect to have a positive growth rate in the world. We also wish that we could able to get a positive economic growth rate. But having said that, if you think about the Sri Lanka, our insiders as well as the outsiders is expecting for Sri Lanka a negative growth rate based on this COVID impact. Even the ADB is assuming negative 6.1%. Even our very own central bank also, I think, if I'm correct, I would be corrected by Dr. Sumali Wanaguru later, are expecting based on their reports. I browsed their reports, but they were expecting a negative growth rate for Sri Lanka after this COVID impact. Right. There is a reasons for these things. So if we think about the couple of the last decades of Sri Lanka was a remittance-based economy. Our economic planning were based on the remittances. Remittances was the stable foreign exchange earning, category for Sri Lanka, whether fortunate or unfortunate. That's mean the skilled and unskilled laborers who are working in outside Sri Lanka. We plan all our economic activities mostly based on the remittances that we are getting from them. But due to this COVID, we all know that stable, which was a stable, income earner would be really a question at this juncture. When we talk about the export composition, even in 1980 and 2019, if we compare those three decades, is still what we could observe. There is no major changes has occurred in this composition. Only there is a slightly the tea, which was 35% in 90s, has taken by the textile and garment. That was the only major observation one could make. That's mean our export has not been diversified. That's we could discuss in detail later. Okay, so and also what has happened in 1977, where we had a positive trade deficit. It's day by day the trade deficit is winding. So all these indicators is telling us that our economic condition, even before the COVID or even after the COVID, is not in a good situation, right? So having this big background, now we have to think about how we could take this country forward, or how could we stand on our own feet. There is no point of talking about the debt ratio and all, the government income, everything that's if you observe, it is not a good sign, right? But we have to be really pessimistic, and we have to be really confident on our country to take forward. So from that point, without time postponement, what has happened, who should take responsibility, rather than talking about those things today, our responsibility as an academia, as the university, as the department, our responsibility is to think about the strategies, what are the changes we do need, what are the policies we should focus on to take this country forward. For that, we have three heavyweight from three different sectors of the country. So I'm really confident that this discussion would be benefiting for all the stakeholders who are interested on Sri Lankan economy, not only the policymakers, not only the academia, not only the students, even outsiders also who are really focusing on Sri Lankan economy. This discussion would be really benefit them to remold their thinking, right? And maybe an eye-opening discussion. Therefore, I first would like to open this discussion with Dr. Sumali Wanaguru, the Senior Economist, Economic Research Department, Central Bank of Sri Lanka. I think our very own product, Tilini Navaratne, explained about the process of this conference. You will be given 10 minutes, but if you want, I mean, I know Dr. Sumali has keep on requesting 10 minutes is not enough to discuss the way forward of Sri Lanka. I really understood that, but we have to think about the time management and all. But Dr. Sumali, since you are the one and only, lady panelist here, lady, intellectual, Sumali Wanaguru, so you could take, if you want, 2-3 minutes, because you have the priority. So we'll start with Dr. Wanaguru. We want to hear your ideas on this topic. Yes, Doctor.
Yes.
Yeah, you could start.
Yeah, thank you very much for the introduction and for you especially giving a background about the Sri Lankan economy. And let me first share my slides. Yes, I think you can see my slides. Hello?
Hello, yes.
You can see my slides.
Sure.
Okay, so as you mentioned, our focus today is about the Sri Lankan economy and the way forward. So as you gave some background about the past few years, especially after the 1977, I would like to go through what happened very recently in 2020 first. So actually, today we are in a world where the COVID-19 pandemic severely affecting the world. So especially during the first half of the year, pandemic negatively affected the economic activity more than expected. As per the latest growth projections of the World Economic Outlook of the IMF, the world economy is expected to contract by 4.9%, with both advanced and emerging economies recording their worst performance. Amidst the economic disruptions caused by the COVID-19 pandemic, monetary authorities all over the world have taken 373 steps to ease monetary policy thus far in 2020. So far in this year, monetary authorities have reduced policy interest in 228 occasions. Moving on to the Sri Lankan economy, as per the Department of Census and Statistics, the economy experienced a contraction of 1.6% in the first quarter of 2020 compared to the 3.7% growth recorded in 2019 first quarter. The services sector grew by 1.7%, but both the industry and agriculture sectors contracted by 2.5% and 0.4% respectively. Notably, normalcy has returned to most economic activities in Sri Lanka following the pandemic-related lockdown measures. Therefore, even though a higher contraction is expected in the second quarter, we anticipate a robust recovery during the second half of the year, especially during the last quarter. The central bank has substantially eased monetary policy and monetary conditions over the past 5 months. This is in addition to the other measures taken to revive the economy and support business activity and the financial sector. Policy rates have been reduced by 150 basis points in 2020, in addition to the 100 basis point reduction in 2019. Following the monetary policy actions, we observe that market interest rates are adjusting downwards, and this can be clearly seen from the graph on your right-hand side. Accordingly, the average weighted deposit rate declined to 6.74% by August 2020 from 8.2% at the end of 2019. And average weighted new deposit rates declined by 5.78% in July 2020 compared to 8.89% at in 2019. Average weighted prime lending rate has also declined to its lowest level since September 2015, and weekly AWPR declined by 32 basis points to 6.66% as of end August 2020 from the previous week. Meanwhile, we observe that the pace of adjustment of the market lending rates has been accelerated these days. The average weighted lending rate has declined by 130 basis points during 2020, while the average weighted new lending rate has declined by 295 basis points. Meanwhile, yields on the government securities market, government securities have declined sharply thus far during the year. So the reduction is more than 300 basis points for all maturities. Though the central bank reduced policy interest rate, market lending rates adjusted downwards and surplus liquidity levels prevailed in the market. Credit to the private sector still remains low. During July 2020, credit disbursed to the private sector contracted by rupees 3.6 billion, followed by a contraction of 54.1 billion in June 2020. Year-on-year growth of credit to the private sector decelerated in July 2020 to 4.2%, but an expansion in credit to the private sector is expected during the latter part of the year. On a year-on-year basis, broad money growth is on a rising trend. Thus far in 2020, driven by the expansion in domestic credit, particularly credit to the public sector. Accordingly, we experienced a growth in broad money of 15.7% in July from 41% recorded in June 2020. Now, if we move on to the external sector is severely affected by the effects of the pandemic. However, during the first 6 months of the year, trade deficit narrowed by 335 million US dollars, with the import declining sharply following the restrictions imposed on the non-essential goods and lower oil prices. However, export earnings gathered momentum earlier than expected, though imports are picking up. As per the preliminary customs data, the deficit in the trade account narrowed by US dollars almost 600 million in July 2020. This slide summarizes the measures taken to restrict import expenditure during the COVID-19 lockdown period. These measures taken by the government and the central bank have helped external sector during the pandemic. With the current developments, Burgess remittances are expected to reduce by 10 to 15% in 2020 compared to 2019. With a minimal expectation of a noteworthy revival in the tourist arrivals for the rest of the year, earnings from tourism in 2020 are expected to be low. Though really important for the economy, FDIs have stagnant in recent years. Many reasons, including our structural issues, such as policy inconsistencies, difficulties in setting up and investments in the country, political uncertainty, security concerns, and most recently the COVID-19 pandemic have been contributed this issue. However, merchandise and service exports oriented FDI should be promoted with Sri Lanka's advantage of skilled labor force. Central Bank has taken all efforts to maintain an adequate level of official reserves with improved quality. Maintaining a high level of reserves is necessary to meet the future external debt service payments and to maintain investor confidence. When we talk about gross official reserves, we shouldn't look at the nominal amount of the reserves, but there are some indicators such as months of imports and our reserve ratio to short-term debt and liabilities. Those are the indicators we should focus on. And improved trade balance and political stability appear to have helped stabilize the Sri Lankan rupee. Exchange rate depreciated at a higher rate of 9% by early April. However, recording almost 200 rupees per dollar. But the policy measures taken by the government and the central bank helped stabilize foreign exchange market, and the rupee recorded a substantial appreciation since mid-April. So the depreciation of the rupee against the dollar is now around 1.5%, and the central bank has absorbed more than $200 million from the market on a net basis to augment reserves. Higher external debt service payments and persistent current account deficits have necessitated continuous foreign borrowings by the government, and this remains a huge concern. Sri Lanka has been issuing international sovereign bonds since 2007 and obtaining syndicated loans since 2016. Majority of these ISBs, together with other debt repayment obligations, has resulted in significant annual external debt service payments over the medium term. In order to meet future debt service commitments, Sri Lanka will have to continue a rigorous external debt financing program with at least $5 billion being required annually. Meanwhile, fiscal operations of the government underperformed during the first half of 2020. The budget deficit widened to 736 million rupees, mainly with the decline in government revenue. With regard to consumer prices, inflation remained low of 4 to 6% on average. CCPI-based headline inflation decelerated marginally to 4.1% in August, while core inflation remained unchanged at low levels. Food inflation accelerated to 12.3% on a year-on-year basis in August 2020 from 10.9% in July, and non-food inflation decelerated to 0.8% from 1.5% in July. So now moving on to the way forward, these are our medium-term projections we published in the annual report 2019. These projections were prepared assuming that there would have been a positive growth in the first quarter of the year, and that the economy could record a contraction in the second quarter of the year. And then with the removal of lockdown and normalcy returning to the domestic economic activity, we assume that there would be a positive growth in the third and fourth quarters of the year. However, bit surprisingly, we received a negative number for the first quarter. We all know that 2020 is an year where projections are extremely uncertain, as the pandemic has resulted in an extremely dynamic situation. However, as we are getting data for the first 7 or 8 months of the year, we are revisiting our medium-term macroeconomic projections at the moment. High-frequency data we are receiving show that economic activity is picking up with the restoration of the normalcy. I can briefly summarize what we are seeing at the moment. As I said earlier, we are expecting a contraction in the second quarter. However, with the information we have, we expect that the economy will recover towards the latter part of 2020 and to rebound significantly in 2021, despite this slowdown observed in the first half of the year. So our best case scenario is that the real GDP growth in 2020 would be around 0% amidst the effects of the COVID-19 outbreak. With positive policies and reforms, growth is expected to accelerate around 7% over the medium term. Although exports have regained the momentum earlier than expected, a drop in exports is projected in 2020 compared to 2019. Imports are expected to be subdued in 2020 with the restrictions imposed on non-essential imports and lower petroleum import bill. We do not expect any pickup in the tourism industry in this year. Though workers' remittances increased on a monthly basis during the last couple of months alongside the Ramazan festival, we expect that workers' remittances will remain subdued this year. As such, we expect an expansion in the external current account deficit in 2020 before converging to a sustainable level in the medium term. Meanwhile, medium-term fiscal path projects a weakening of fiscal balances in 2020 before moving on to a consolidation path thereafter. A part of the weakening is due to the payment of arrears from the previous year and recording a part of debt already obtained in the previous year. Although revenue collection drastically declined, we expect that expenditure will also be low. Overall, the larger budget deficit is expected in 2020, followed by a fiscal consolidation path thereafter. And the monetary sector is expected to provide adequate liquidity and private sector credit to support the revival of the economy. And within the flexible inflation targeting framework, inflation is projected to be maintained within a range of 4 to 6% in the medium term. So with that, I will stop my presentation. Thank you very much for giving me an opportunity. Thank you.
Okay, Dr. Sumila, I gave you 10 minutes, you have taken 14 minutes, but as we all expected, we had a really, informative session, especially you used the data and explained the present situation really well. What I felt from your explanation, you are really positive on this, economic, even within this pandemic situation, you are expecting we could recoup everything and we could, go forward. Right. We could discuss it in detail later. Right. Having this positive, nice, clear voice from Dr. Sumila Wanaguru, now I would like to ask all the virtual spectators here, all reserve your questions. First, we'll take these presentations or discussions. We'll proceed to the discussions right after these presentations. So, meanwhile, you could send your questions through using the chat facilities available in the Zoom to Amanda. Right. After having this voice, I would like to ask Mr. Sharif, Acuity Knowledge Partner, Associate Director, Equity Research Project. So, what's your opinion on this economy? What are the strategies you think us to way forward? Yeah, you are free to talk on this topic. You would be given 10 minutes. Yes, now we could see your nice, confident figure from the screen. Okay, yeah, it's up to you.
Thank you, Professor Kumarasinghe, and it's actually a very good evening to everyone, and it's a real privilege to share this discussion with the fellow panelists, esteemed panelists, Dr. Sonali, Mr. Tushara, and yourself, and other faculty members from the University of Jayewardenepura, as well as all the graduate students and postgraduate students joining in. So first of all, I think Dr. Sonali gave a very good overview of what I think on the overall macroeconomic picture, what we can expect. And in terms of just the business impact that we can see, I think for the most part, I think what COVID has kind of disrupted not only Sri Lanka, but I think there is not a single economy in the world that is not feeling the pain and the drastic impact of COVID on their respective economies. I think it is basically more or less sort of caught everyone unaware, and I think it's an unprecedented event, the first one in about 100 years, to impact the world in such a way. So a lot of assumptions, a lot of what has gone down in the past, kind of basically we start almost from scratch globally. For Sri Lanka specifically, I think just want to kind of look at it from both the positive sides and also what are the counterbalancing negatives as well as the risks. If you look at as Dr. Sonali mentioned, we've come into this pandemic with certain challenges, having faced a cycle of the last 4 or 5 years of anyways weak economic growth, where structurally our economy has been slowing down. And that is also partly due to the fact that over the last 5 years, Sri Lanka has been in sort of like a deleveraging cycle. And also there was, some political instability and policy instability that also kind of, didn't give the market enough of confidence to go out and invest. So against the current landscape, what we see and what some of the positives are is that the COVID pandemic actually has, the situation for 2020 is bleak, but that is the same for most of our peer economies. If you look at countries like even India, I think their second quarter GDP performance has been very weak. If you look at even countries more on the advanced scale in Asia, such as Singapore, that also has been down double digits, significant double digits in the second quarter. So expectations, I think, are weak across the board. So Sri Lanka is not sort of unique in that situation. But what is a positive is the fact that we've had relatively better success in managing this pandemic in the country. So as we've come out of lockdown, I think Dr. Sumali also had a very interesting slide where it shows that, economic activity has actually picked up. And that can also be seen just in general. I think, as you are out in society, things seem to be almost at a back to normal situation to a great extent. So from the domestic economic point of view, things seem to be starting to move forward. And at the same time, we have to understand that, again, as much as we've managed the situation very well, a lot of our end markets for our exports, our source market for remittances, all of them still remain quite weak. And, so, pick up in those economies it's something that is out of Sri Lanka's hands. But I think in terms of how Sri Lanka has been getting their act together and being proactive in kind of, addressing certain things, I think at the start of the pandemic, our export outlook seemed very, very negative. But if you look at the last 3 months, I think June, July, and August, exports have almost either surpassed or touched at least $1 billion per month. And I think that has been positive compared to what expectations were in around March. So that has been a positive. And then combined with, import restrictions, we've had a situation where our merchandise exports to import deficit has been, curtailed, and I think in surplus for the first time in a long time in the last month. So those are positive, which also gives us a little bit of leeway and takes away a little bit of pressure on the dollar as well, which is a positive thing. Looking forward, what are the opportunities for Sri Lanka? Again, in terms of opportunities, I think the same course of what our opportunities are stands. And what Sri Lanka's success will be based on is again basically 3 things that we've always expected from Sri Lanka, but it is now, I think, a time where we have to go out and realize it with proactive steps. So Sri Lanka's growth story, I think, has now, as we've approached, we were a middle income country according to many classifications as of last year, coming into that $4,000 per capita income range. We've slipped back again and we have gone back into a lower middle income country. And the one positive from that is that still now allows us to be eligible for certain, concessionary rates on, multilateral donor funding, as well as, certain trade agreements like the GSP plus, which means that, we'll still be eligible by at least the general expectation. So that would give us, certain tariff concessions, exporting into our largest markets, especially in the Europe, and then the US as well. Coming back to the export story, I think, something that has been a positive is how the industry from a garment sector has kind of, proactively worked into moving into, from obviously the typical exports of garments have been, under a lot of pressure given the significant pressures in our largest source markets of Europe and the US. But, they quickly kind of, reshifted their strategy towards more of developing, protective equipment for the medical industry. And I think that was some sort of a tailwind. There have been some agricultural exports that have also done well. So, it's a good sign that the industries have been able to quickly adjust and kind of, cater to what are the demands of the global market. Going forward, I think the three really the big things is that, again, as we look at building out a more services oriented economy, I think Sri Lanka's future is very much dependent on port related export services. At the same time, tourism remains one of our biggest value propositions as a country. I think, last year, I think, it was more than $5 billion of, tourist earnings. Obviously, that is going to be very, very low this year, given that, we're not having any tourist arrivals. And thirdly, I think a very underappreciated part of our economy, which is about close to $1 billion in services exports per year, is the combined knowledge services industry, which obviously Acuity Knowledge Partners is also a part of. And those are the three things that I think, continue to basically drive Sri Lanka's economic future. And in terms of those three elements, I think if we start off with tourism, we are a country, who had 2 million tourist arrivals in 2019. Even, and that's been roughly the ballpark amount of numbers we've had for the last 2 years. And, Sri Lanka easily, if you look at other Asia-based tourist destinations like Indonesia, Malaysia, Thailand, the Philippines, they are all kind of attracting more than 10 million tourists a year. And Sri Lanka easily has that long-term potential given the value proposition, of our island. And I think, the continued development of that is a key part of both attracting, foreign remittances, dollar earnings, as well as providing employment across the country for, for large amounts of people who are semi-skilled or not, graduate skilled. So that's something that, has to continue to be a focus point. We have to have tempered expectations because of the pandemic. But, even if it's not 2020, 2021, we should see some improvement. And again, I think, we'll really start to see the benefit maybe in a 2022 sort of time frame. Port services, again, given Sri Lanka's strategic positioning, with, being a major link in the China One Belt, One Road initiative, is something that is very, very, which could drive both, not only the port related services, but adjacent industries that develop around that and provide a lot of employment. That should be we've seen good results in that strategy, and especially as a transshipment hub into India. And, especially South India is one of the fastest, in a pre-pandemic world, South India was one of the fastest growing regions in Asia. So our location, adjacency definitely positions ourselves in that way. And the third thing, I think, which is a very important thing, given, compared to the other our peer nations in emerging Asia, Sri Lanka has a relatively more not as young a population, as well as we do not have cheap labor at the scales of India or Vietnam or Philippines as well. So our value proposition is not more on the manufacturing or on the agricultural sort of side, but more on kind of shifting towards more knowledge based industries. So for example, we do close to about $1 billion of services exports, knowledge-based services exports a year. And that is something that is not, and growing that number is not really something that is a demand constraint issue. It's more on the supply side of our talent. I think, we have a lot of good talent, especially development in the last few years, but still having that at scale will be something that if we can achieve that, there will be lots of better, higher paying jobs in the services of financial services exports, as well as IT exports that we can get. For example, I think a recent entry into Sri Lanka has been HCL, an Indian knowledge process outsourcing firm. And we have many of those that have come, but that is again largely dependent on us being able to invest in our soft infrastructure, like training, more universities, more university capacity. Because if you take Sri Lanka and if you look at our gross enrollment ratio into tertiary education platforms, it is at a similar level of GDP per capita. It is actually one of the lowest in the world. And as we have a not as young a population, and since we do not have enough of scale to be competitive in a lot of industrial based export services or agricultural based export services, this is an area that definitely needs a lot of attention. So those three in summary are kind of the big things that will drive our economy going forward. But just wanted to highlight a little bit of what are the things that have changed in a COVID because of COVID, and how structurally benefit.
Qadhir, I could give you another 1 minute because
Sure.
please try to wrap up this session, so you could get more time during the discussion.
Sure. Just so this wrap up part is that I think one positive thing that has happened from the pandemic is that there has been an accelerated shift towards the importance of digitization. So that is something that will basically improve our competitiveness, and at the same time, given the impact it has had on a lot of developed markets as well, and central bank actions in those countries, even for Sri Lanka to have a lower interest rate regime, it becomes easier in the coming years because of the global environment. And I think, that has also been structurally an issue that we've faced for businesses and capital formation, and, for investment, the level of interest we have to pay. So that is something that is also a positive, one of the positives that we can take forward. With that, I'll wrap up for now, and happy to take questions during when the floor opens up for questions. Thank you, Professor Kumar.
Mr. Sharif, I think, you have drawn a lot of ideas. If the leaders are listening to this one, I mean, really, they could shape up a lot of policies based on your discussions. Especially, I really appreciate the three strategies you put forward: the tourism, and also the combined knowledge services, and the fourth related industries that we should pay our attention to enhance the, especially if you want to take the country forward and earn more dollars to this country. And there are some agreement and also disagreement with you in your discussion, but this is not the time I do have a debate on with you. But really good points you discussed these things. Me too personally also believe to take this country forward, we have to use our human capital. I think if you observe these three factors, what you have discussed here as the strategies to take forward, you discuss about the economic instability, how that has happened and impacted on our low, indicators, what we are observing today. And also, if you discuss these three strategies, we know how important our human capital. So these three strategies, and you discuss about how our infrastructure should be built on to get the competitive edge on these three sectors or three strategies you discussed. Right. We could have a discussion, and please, my viewers, we are really happy to have 177 viewers are there through this in this virtual platform. Right. With that note, I would like to give the opportunity to the Mr. Tushara Jayaratne. Is the Director, External Relations and Capital Market Education, Security Exchange Commission. So yes, Mr. Tushara, it's your turn. So what do you think about, you have listened to these two great personalities. Now it's up to you to fit on to this stage, sir. Yeah.
Yeah. I hope that you can hear me properly.
Yeah, very nice and clear.
Now, okay. Now, in my case, I'm representing the government regulator. So, not like previous two presentations, most probably I will go into micro level. Now, see, if you take the stock market, now I don't have to explain how stock market is the imports of the stock market to the economy. In this case, now if you take the COVID pandemic, and then we couldn't 50 days from 20th March to 11th May. The market was pandemic after the lockdown. If you take the stock market performance, the oil share price index had gone up by 19%. So there are positives and then there are negatives, but then if you can take the stock market, there are a lot of positives here. The market performance, especially, but if you take the entire year, the market has gone down by around 11%. But from the lockdown, from 20th March, the market has gone up by 19%. That's the overall market, the oil share price index. But if you take the more sensitive, more blue chip S&P SL20 index, it has gone up by 21%. So the more liquid, more market cap wise, most stable companies have gone up by around 21%. So this is a good sign for the market. And also, if you take the average daily turnover, before the pandemic, we were averaging, the stock market was averaging around 1 billion turnover per day. That's also because there was one day that we had around 23 billion turnover. So if you add that also, total market, if the average market turnover, daily turnover was around 1 billion before the pandemic. Then after the lockdown, when we reopened the market, the turnover had gone up. Daily average turnover now is around 1.32 billion. So turnover is also, the market has performed relatively well. And then the negative factor here is basically the foreign investor behavior. Foreigners have moved out from the market. As Qadhir mentioned also earlier, it's not only the Sri Lankan stock market. And then even if you take almost all the Asian stock markets, foreigners have moved out from the markets. So here, before the pandemic, till 20th March, we had around 5.2 billion foreign outflow. The foreigners have moved out from the market for 5.2 billion. But now if you take the entire figure for this year up to now, up to yesterday, it's around 33 billion outflow. So that's the negative factor. But with this current environment, with this situation, economic situation all over the world, we cannot expect foreigners to come to the market very fast. But the good factor is that foreigners have, when foreigners have moved away, but the domestic investors have come in. Not only retail investors, even large investors have come into the market, and especially the retailers, they're dominating the market. So because of that, the market has shown some kind of a resistance to this pandemic. And then also, if you take all the other foreign markets, all the Asian markets, most of the markets have gone down a lot. So this, if you take the stock market as a summary, statistics wise, the market has performed significantly well. And then what Qadhir mentioned earlier also, this has opened up some kind of an avenue for the stock market to change. Now, I'm not sure whether you know about this, but then from next week, the entire stock market will be changed. right now, if you take the stock market, some parts of stock market is digitalized. For example, say if you take the trading aspect of stock market, the stock market is fully automated. And then if you take the settlement aspect of the stock market, the CDS aspect of stock market is automated. But end-to-end transactions from investor going to the stockbroker firm, opening a CDS account, and then after selling shares, where that he's getting money or giving money to stockbroker firm, and these were not digitalized. Sri Lanka was one of the first markets in the Asia to computerize the entire trading system, and then also one of the first to open start a CDS system, that central depository system. But then that was CDS was in 1991, and then the ATS, the automated trading system, came in 1997. But after that, the most significant event will happen because of the COVID pandemic. The reason was that during around 50 days from March to May, we couldn't trade. The reason that we couldn't trade was basically market was not digitalized. Some parts were not digitalized. Foreigners could have traded, and also some domestic investors, sophisticated investors, yes, they had opportunity to trade, but not a retail investor. Now, for example, as you know, if you want to come to stock market, you have to go to a stockbroker firm and you have to open a CDS account. And only that you can trade. And also, when you buy shares or when you sell shares, when you buy shares, you have to pay the stockbroker firm in 3 days. And when you sell shares, you get your money in 3 days. So that also, up now, investors, they have been using checks to make the payment, or they were receiving checks from stockbroker firm to get the payment. And also, most of these transactions, what they do is they call the stockbroker firm, or they visit the stockbroker firm, and then they give their orders. But from next week, the entire thing will change. The market will be digitalized. Not even now, anywhere, even from Sri Lanka, from Jayaratne to Colombo, or anywhere, even all over the world, investors now will be able to trade from the stock market to their mobile phone. So they will be able to open a CDS account from the mobile phone, and they will be able to trade through the mobile phone, and they will be able to. What we have done is we have asked all the investors in Sri Lanka. Right now, we have around 800,000 accounts, CDS accounts. As you know, if you want to buy or sell shares in the stock market, you have to open a CDS account. So we have around 800,000 CDS account holders in Sri Lanka right now. And then we have requested all the CDS account holders to give their mobile number, and also their bank account details, and also their email address. Actually, the deadline was 10th September, yesterday. And then we have asked investors to give this information, because from now on, each and every transaction they do, they will get a email, and they buy shares, their bought notes, they will get through email. When they sell shares, their sold notes will get through emails. And also, when they pay, they will get their money into bank directly. So from next week, since 1997, for the first time, we are going to digitalize the entire stock market. So this was accelerated because of the pandemic. Because during the pandemic, there were a lot of complaints from investors. And then when we were trying to reopen the market, some of these Sri Lankan investors, local investors, they complained that, during curfew, they won't be able to go to a stockbroker firm, or they won't be able to collect money from stockbroker firm. And then stockbrokers had issues because most of these stockbrokers, sometimes they deal with especially local investors, through checks. So when you have curfew in the country or lockdown in a country, then they can't move, and then move one place to another place, and then they had an issue of how to trade. So now this entire thing will change, and then because of that, the concept, and then also the way that we trade in stock market, the entire thing will change from next week.
Okay, really appreciate and the time management. Yeah, you used only 8 minutes, Mr. Tushara, really, and explain what has happened really due to the COVID pandemic. So we all now know that 33 billion, outflow has occurred due to this COVID, especially around this stock market exchange, right? So now this is the time us to go to the next level of this session, that is the discussion. So we have received many questions. I don't know whether we could get the time to accommodate all the questions we have received here. But based on the importance of the questions, we will try to give as much as possible. Some of the questions we could merge together for the to serve the time. Right. First, I would like to MTKG Kumar. Right. MKG Kumar, are you there? So
yes, sir.
Yeah, MKG Kumara. So you want to ask Dr. From Dr. Wanaguru. So Dr. Wanaguru, so this question is directed to you. So I would like MKG Kumara you to direct your question. Keep brief. Yeah.
Thank you very much, sir. I am Kapilaja Kumara, a student of Master of Business Economics. Without further ado, I will directly go to my question. As you know, apparel and textile exports accounts 45% of total exports of Sri Lanka in 2019. 80% of apparel exports goes to USA and EU countries. So according to the IMF projections for 2020, real GDP growth of USA and EU will be -8% and -10% respectively. They are the main buyers of our garments and textiles. In this background, I would really appreciate if you share your thoughts or the assessment on the impact of COVID-19 on apparel and textile export of Sri Lanka. Thank you very much.
Yeah, Dr. Wanaguru, I mean, I think the question is nice and clear. So you could answer. So he is expecting to get a view on what will be the future of the apparel industry based on this impact.
Thank you very much. It is a very timely question that you asked. Yes, the USA and EU countries are heavily affected, and this year they are expecting a very, I mean, their performance will be worse because of this COVID-19 pandemic. As you correctly pointed out, yes, our apparel garments and garments goes to USA and EU countries. So there will be less demand for our apparel from those countries. But the thing is, like now our apparel industry quickly move to some other quickly move to some other products such as PPEs. So now they are like doing PPEs like personal protection items and some masks, so that there is a big demand from some other countries for those products. In that case, we are expecting that apparel industry would maintain some performance during the year, but overall we are expecting some decline for this year. But from next year onwards, we are expecting a pickup.
Okay, I think it's a very good response. Me to believe that is the way to come out and face this challenge, right? So I would like to very humbly request my virtual platform partners, please make your questions short and sweet. So now I would like to ask Ifar Nias. Are you there? Ifar Nias, are you with us?
Yes, sir.
Yeah. Yeah, you want to direct your questions to Mr. Qadhir. Mr. Qadhir, are you ready? So please respond to this question. Yes, Mr. Nias, sorry, you could direct directly to Mr. Qadhir. Yeah.
Thank you, Professor. So Qadhir. So our question is, as you all know, COVID has disrupted all of the sectors and all of the economies indiscriminately. So using this as an experience, how can businesses build resilience to successfully face maybe uncertain business climate in the future, and also specifically with regard to the knowledge sector, what needs to be built with respect to handling in-house human resources and recruiting new talent to build resilience? Thank you.
Yeah, I think the question was not so clear, so I would like to repeat the question, Mr. Qadhir. What the first question was, how can business build resilience to face this uncertain business climate? Okay, how you could build on. The second question also when related to that round, how to build resilience in knowledge business sector post COVID-19, what aspect should be changed in, especially handling in-house human resources. So recruiting new talents. Yeah, what's your response to these questions, Mr. Qadhir?
Sure. So I'll start with, I think in the overall, how do businesses sort of, build resilience to, these kind of situations. So I think one most important thing is always having sort of, a redundancy measures and redundancy protocols in the events of, uncertainties. Because and I think what this also has taught the entire world, not only Sri Lanka, is in the event of uncertainties, do businesses have sufficient backup plans, and how quickly are you able to implement those backup plans? For example, I'll just take the example of our own firm at Acuity Knowledge Partners, and this will also partly answer the second part of the question. We've been monitoring kind of this situation, I think globally, how it has been going. And, Acuity Knowledge Partners is by design over the last 18-year history of our firm has, and also due to, because of the fact that, we work with extremely high information security and compliance standards, it has been a firm that, and an industry that mainly works kind of, from a work from office setup. And I think, with the proper planning and with the proper mitigation measures, we were able to sort of, migrate our global workforce of close to 3,000 analysts to work from home infrastructure in a matter of a couple of days, minimizing to a great extent, any downtime in client service and client support. And I think that was because we had very good, robust, advanced planning. That does some level of scenario planning for certain uncertainties. And I think the short answer in terms of how you're going to manage uncertainties, I think the short answer is basically every firm has to have some level of an advanced digitalization platform. I think work from home through virtual computing platforms has been a big thing that we've adopted and seen a great level of success. We've seen a positive side of that in terms of a higher, more motivated and productive workforce as well. And at the same time, I think the importance, there are many technologies like cloud computing, virtual computing, that basically in situations where there is uncertainty, where you can plug and play from multiple locations, different times. That's a very important strategy to have, and I think that is what a lot of companies are now introspecting themselves to, how good their digitization strategies are to deal with these sort of uncertainties. We are having this webinar today also on such a platform such as Zoom, which we, in terms of managing the human resource angle, these kind of platforms allowed us to have more FaceTime with our own teams. And at the same time, during the pandemic, during lockdowns, we continued hiring and so on, and training as well, using all these sort of tools that these tech tools that are available. So I think just in summary, I think good level of business continuity planning for uncertainty, and having redundancies and a digitization strategy are the things that can build up resilience both at a country level and at an individual company level.
Okay, I mean, yeah, we got a very good response for the question. Right now, we have a question to Mr. Tushara Jayaratne, but unfortunately, the viewer, he is having a technical difficulty to connect with. So therefore, I would like to ask the question on behalf of him. So what he wants to know is, I mean, you explained, Mr. Tushara, that 33 billion outflow has occurred, during this COVID impact. So he wants to know what are the strategies from the controlling point of view to regain the lost, this dollars. That was basically his idea. What are the strategies? How you look forward to get that, currency back to the country? That is his question. Unfortunately, he cannot come through the online platform due to a technical difficulty. Yes, Mr. Tushara, would you like to respond to that question?
Yeah. Is it possible you to give me 1 more minute, because there's a power failure here? So if you 1 more minute, I'll just
yeah. So then, okay. We
give me
also,
please 1 more minute.
Sure. Then I would like to again take the opportunity to ask direct questions to Dr. Wanaguru. MHS Anuruddhima, are you there with us?
So Anuruddhima cannot be contacted. Actually, she has a technical error. Therefore, I am Nadisha Nanayakkara, one of the group members. Can I direct the question?
Why not, Nadisha? Sure.
Thank you.
Nadisha, yes, please. Dr. Wanaguru, this is for you.
Thank you, Doctor. It's something like this. Is there a possibility, like now most of the orders that has been dropped from Sri Lanka, I mean, there's a drop in the export orders, and there are certain orders that had been directed to India and Bangladesh as well. But since they are basically I mean, they are experiencing more impact than us, is there a possibility of directing those orders to Sri Lanka so that there is a possibility of increasing the exports in Sri Lanka? I think the question would be clear to you.
Yes, the question is clear. Yes, that's another very good question, because this especially due to low wages, there were a lot of orders going to, especially to Bangladesh and Vietnam. So during this pandemic also, there were some redirection, but as you know, that now the Bangladesh and India, they are at the moment severely affected by the pandemic. So they also face a lot of problems. So our strategy should be, as you clearly mentioned, as you rightly mentioned, our strategies should be to attract those orders going to India and Bangladesh to Sri Lanka. So for that, there should be some conducive environment. So our real wages are really high. So that is a big concern in terms of garment exports. And the other thing is like our productivity should improve. There is no doubt about that. And we should be ready to go for technological advancements. So if we can do those things, I think we have a very good opportunity. So this cannot be done by the government or the private sector alone. There should be some contribution from the government as well as the private sector should take the lead. That is my answer for that question.
I think, it's a really good response. I also believe that if a country wants to take up forward, if you look at the some of the East Asian countries also, it's not only the government, it's not only the private sector, it's not only from the academia. All these people get together and lift their countries. I think I 100% agree with the response given to that question, Dr. Wanaguru. Now I think Tushara.
Thank you, well. Thank you, sir.
Yeah, Tushara, I think
Yes, I'm here. Yes.
Yeah. Can you remember
Yes, I'm ready.
what are the strategies that you could regain, like what you have regained the power quickly? I don't know how you have done it in Sri Lanka. Like that, can you get this 33 billion back to the country? Like what? How you have get the power back?
No, the thing is that now the only negative factor because of the pandemic that I can see is 33 billion net foreign outflow. But then I don't know whether you could recall in 1997 when if you take Sri Lanka's the composition, we had 80% foreign contribution to total market turnover and 20% domestic contribution. So at that time, late 90s, the market was basically controlled by foreign investors. So during 1997, with this East Asian crisis and also at the latter part of 1990s, what happened was that there was this nuclear test by India and Pakistan. So what was that those foreign investors, they moved out from India and Pakistan, but not only that, when they come into the region, they come into the region. So what happened was that not because of our fault, but then all the foreigners moved out from our market also. So at that time, we realized the fact that if you are going to depend on foreign investors solely, that will have a huge issue in the future. So then what happened was that stock market moved other regions. For example, when you say Colombo Stock Exchange, it was limited to Colombo, maybe around 25-30 years back. But gone out from Colombo, and then they have stock exchange they have branches, and then also we get a lot of investors from other countries plus areas outside Colombo. So now what has happened is that there was a balance between domestic investors and foreign investors. Recently, then we had this 50-50 contribution to total market turnover. But now again, now if you take our total market turnover, around 62% is coming from domestic investors. So what I mentioned earlier during my initial remarks, what I mentioned that this 33 billion outflow is the only negative factor that we can see from the market right now. But then foreigners, they will come back when they realize the stock market. Then they will then invest shares for sure. That we can do is we can now, for example, if you take the stock market, what I mentioned earlier also, the market will be fully digitalized, and also we are going to introduce a new SEC Act, and then we are working with the International Organization of Securities Commission, ISCO, and then when they realize the fact that these kind of things like the investor confidence factor, that's the most important thing that we should enhance. Also, when foreigners see this, especially the value of the market, they will definitely come back.
Yeah, Tushara, I can't let you go. I have another questions to you before turning to the other panelist here. So I got a call, SMS message, and it's a message I got from one of the viewers. Maybe he's also having a technical difficulty to getting to the online platform. So what he's asking, have you observed any positive, trend in the stock markets? That he's asking your own view, by observing the indicators after the political stability gained by Sri Lanka. This viewer believe that we have gained a certain political stability, maybe right after the election and all. So, are you observing any positive impact this have that converted into the stock market? Maybe that's what this listener wants to know.
Yes, definitely. The reason is that, say, if someone wants to invest in the stock market, they always think about the stability of the market first. So stability of the market will come from stability of the country, and especially the economic stability and also the political stability. Those those things, they play a very important role in enhancing insta confidence. And so we can see, because if you take not only Sri Lanka, any other country in the world, the political stability is a must, especially for a foreign investor to come and invest in the market. Political stability is a must. But even for domestic investors to think about, see, when you buy shares, when people buy shares, they think about the future. So they think about future and buy shares. They want to buy shares today to sell probably in 2 months or 3 months and then earn a profit. So they think about the future. So then they think about the stability factor. So in our view, even my personal view is that the stability, the political stability has impacted a lot in this case.
Okay, Naveen Silva, are you with us?
Yes, sir.
Yeah.
Yeah.
Mr. Qadhir, you could respond, have a quick response on to this question. Naveen, so now you could direct your question. Yeah. Make short and sweet your question, Naveen.
Yeah. So yeah, I'm Naveen. So now you see, SMEs are now struggling so hard to get their working capital done, and for that, from the monetary stand, we see interest rate reduction continuously. But there were reports saying still the private credit hasn't been hit the market. So the another option for SMEs is the IPOs, going to capital market. But Sri Lankan side, we see there is a very like chance that the SMEs and even the large companies that are not listed on the Colombo Stock Exchange to go into public and do an IPO, because when you compare our country with other regional peers like Singapore, Thailand, we have very less market capitalization. So what is the actual issue with the SMEs and the large companies that are not going to the rather without looking at the debt side, looking to equity side? What is the
Right, Naveen, I think we got your question. So, what Mr. Qadhir, Naveen wants to know, why large SMEs are not taking this situation as an opportunity? I mean, every cloud, dark cloud has a silver line. Like that, why they are not using the capital market to raise funds? Yes.
Sure. So, I mean, I think that's a good question. I think we've had an issue of, I think, raising finances, I think, through public capital markets for quite a few years now, and I think that is something that I think, I know the regulators also are looking at quite closely. I think one reason is, I think, given I think there are a lot of regulations around listing certain equities in the market, and I think there is a higher level of compliance, administrative cost that is involved in listing on the stock exchange, and I think because certain I think especially for small and medium enterprises, some of those reporting and compliance and administrative costs actually make it less attractive to kind of go ahead and list. So I think that has been one of the bottlenecks that I think historically has curtailed that listing process. And there are markets like in the London Stock Exchange where they have a smaller fund, which I think with a lesser amount of regulations. And I think I read something somewhere a couple of years ago that is maybe an approach that the CSE should consider. So that may be one part. And I think in terms of, I think the overall, I think, the working capital issues that, some of the small and medium enterprises are facing, I think those are down to, I think, structural sort of, issues with regards to, overall liquidity levels. And I think, for example, if you take a lot of the leisure industry, the small and medium players on those fronts, or certain export oriented SMEs, which basically are currently operating because of this pandemic in almost zero revenue sort of environment. So even if they were, I mean, for those companies to list, I think the public capital markets may not even be an option, because obviously the outlooks for them are a little bit weaker. So I think for those kind of things, I think, private equity injections or, government support are some of the only options that are available because of the fact that, the pandemic itself has, there are some businesses which are moderately impacted, but there are certain SMEs that are kind of, gone down to sort of a zero revenue sort of environment when you look at especially a lot of the companies in the leisure sector. So I think, yeah, that's where we stand right now.
Yeah, I think from your response, I think I want to know from Dr. Wanaguru. Would you like to respond? Because Mr. Qadhir, Dr. Wanaguru, can you hear me?
Yes, yes.
Okay. I think Dr. Qadhir pointed out a very strong, thing in our economy. Me also believe that there are some structural issues where we cannot get this, technical corporations, government and private sector. Always all the investors want to look at the government side too when they want to raise funds, even the liquidity or the, working capital or you name it, every, situation, they want to look at the government side. That's, I think, a structural issue we are having in this economy. So as a policymaker, as a macro policymaker, financial policymaker, are you going to address this thing in the near future, or have you thought about it, Dr. Wanaguru?
Actually, we have thought about it. If you refer our annual reports over the past few years, I mean, we have repeatedly suggested the government and the private sector both to think about this issue seriously. Because always, if you go to a budget forum, I mean, you can experience this in coming budgets as well. If you go to a budget forums, I have that experience that big private sector people, they still want some tax waivers and support from the government to carry on their businesses. But I believe that it shouldn't be the case. The government can't always look after them. So there should be some way that they work on their own. So this COVID-19 case is a good example. So during that period, everybody, all the sectors, almost all the sectors wanted government's help. So they even these hoteliers, if I take an example, because hotels during this, I mean, it's a booming industry. So they got a lot of foreigners and all. I mean, of course, there was a problem during this COVID, this East attack period. Other than that, I mean, it was a booming industry. So, but I mean, when this COVID-19 happened, from March onwards, they didn't receive tourists. But at that time, I mean, because of this COVID, they can't now pay their salaries for their staff even. For that also, they are expecting some support from the government as well as from the central bank. Many people think that central bank can solve the problem. But central bank is there to, I mean, there as a policy maker, and central bank has a very different role to play in the economy. So basically what they want us to like give a support. How? By way of printing. Otherwise we don't have money to support them. So we don't have, I mean, we can't create credit lines. In that case, I mean that the only way we can do, the only thing we should do is printing money. But it has some other repercussions after some time. As you know, I mean, the inflation will be a problem next year if we continue to do so. And our mandate doesn't allow us to do that as well. But the thing is like our mindset, structurally, we think that we should, the government should look after us. So that is the case. So when you say that, I mean, when people say that, I mean, government should do this and that and take this kind of policy measures and all, those people should be ready to change their mindset as well. That is what I think.
Okay, I think I'm going to take one last question to Mr. Qadhir. Qadhir, you could have a very quick responses. We are running out of the time. That is, it is from Amarasekara. Amarasekara, if you are there, you could direct. Please make your questions very short. Mr. Amarasekara.
Yes, sir. Yeah, actually, my question is, now we all know most of the businesses have impacted from COVID-19, and most of the businesses now they are came back to normal, and some of them are gradually coming back.
Yeah.
But when we consider about the tourism industry, still they are struggling with their businesses. So my question is, what type of strategies can be implemented by Sri Lankan tourism policymakers, maybe in collaboration with other stakeholders like service providers, media, and all the people? What type of actions now we take to face this situation when we think about tourism? Maybe it can be some promotion campaigns, or sometimes investment in technology to give a better tourism experience in future. Likewise, what type of strategies that we can implement?
Sure. Thank you for the question. So I think because of the pandemic, and again, I think, the stance seems to be that, until the pandemic is under control, that, we are not opening it up for tourism. I think that is something that is being reviewed on a frequent basis. And I think, original opening up was sort of being earmarked around August, but there is no real clarity around that until the situation is under control, because I think what you don't want is a situation where we open up prematurely and we have a large amount of imported cases, and we go into a lockdown or something like that. So I think that control is sort of important. And at the same time, I think one other thing that is affecting the decision is the amount of Sri Lankan stranded abroad that needs repatriation. In terms of what the tourism industry can do in the interim, so there are a couple of things, and I think some of them are already underway. I know that a lot of hotels are currently opening themselves up as paid quarantine centers for repatriated Sri Lankans, and obviously that is some sort of revenue relief on that front. And at the same time, I think once the lockdown has been lifted, and I think given a lot of these promotions that are going on, there is a lot of domestic tourism that you can see that has also picked up. So I think the hotel industry has proactively kind of moved towards those promotions to kind of bring back some sort of activity back into the sector. In terms of I think the overall strategy, I think when we do open up, I think there's a good sort of story in terms of Sri Lanka, and that is mainly to do with the fact of our extremely strong relative success compared to other tourist destinations in the regions of how we've managed COVID. And I think that is something that needs to be promoted. I think there has been a shift towards digitalizing on social media channels to have more targeted campaigns to certain source markets. And I think obviously the situation in the country is conducive to that. I think overall we have a big value proposition. I think in just what we offer right now, there are different bigger strategies that may come up in the future which could accelerate our tourism value proposition. But I think right now once there is some relief from this pandemic, once we see maybe towards the end of the year the world coming out of it, hopefully, I think there should be a natural increase in that. I think another area which can be developed is basically expanding the connectivity, that is having more flights, promoting more higher end tourism, through kind of setting up access for private jet landings and so on. I think which are something that are in consideration to kind of, build out our villa-based tourism as well. And I think, there are the very good protocols in place. So, hopefully, once this pandemic starts to ease, personally, I think, confident that, tourism should start picking up, I think, hopefully starting somewhere next year, and maybe we'll see the real big benefits in maybe a 2022 sort of time frame.
Yeah, I think we are getting many questions especially from the master students of our own department, the MBA students, MBE students, Master of Business Economics students, as well as undergraduates, and also some of our, own colleagues who are studying abroad also sending questions to me as well as these chat messages. But unfortunately, you have to bear because we have a very limited time. So I would like to ask our beloved director, Dr. Jayaratne, why don't we have another session in a couple of months later? So then we could accommodate so many other questions these people are asking, my own students and some of my colleagues. Okay. Now, we are coming to the last session of this seminar, that is, so now what I believe based on all these discussions, and also if you observe the country's situation, especially the health sector of the country, we are confident that the COVID has been combated or controlled into a certain extent. We are confident that confidence has gone to the society, and that's why the schools are reopening, the universities started to re-functioning. So that has gone to the society. The health sector was successfully with the proper leadership given, and also we have to thank the army personalities and also all the health sector officials and the doctors, you name it, everybody has contributed to make the COVID as a controlled country, right, in Sri Lanka. So we have given that impression to the world as well as within the country also. I think we are confident, right? My question is, to using this wrap-up session, I would like to hear from all my intellectual panelists here, these three people, Dr. Wanaguru, Mr. Qadhir, and Tushara. Mr. Tushara, would you like using 3 minutes maximum, 3 minutes maximum, highlighting that time factor, how can we make this to an economic success? We have successfully able to control the COVID, but that has not still gone to the economic factors. So how can we could link this health sector success to as an economic success? So I would like to start from Tushara, then Mr. Qadhir, and Dr. Wanaguru. Yes.
Yes, thank you. I would like to answer this question using this. Earlier, there was a question about SMEs and why they don't come and list on the market. See, part of my job as capital market education is to go around and then educate potential companies, especially SMEs, on the benefits of getting a listing. And then what I have realized is basically everywhere we go, we get small. Now, if you take the stock exchange, we have a main board and we have a Dirisavi board for smaller companies, and we have main board for bigger companies. And then recently we introduced a board called Empower Board for those SMEs. And then what we have realized when we speak to them, when we speak to those company owners and then the directors, what is that there's a huge structural issue, because most of these SMEs are they are either partnerships or independently managed. So, and then also what Qadhir mentioned earlier also, there's an issue with their accounts. So most of these are not audited accounts. And then see, if we can, now if you take how the question was basically the economic contribution, if we can get more companies to come and list on the stock market, if they can raise capital to the stock market, that will help those companies a lot. And then that will help the stock market to increase the size of the stock market, plus it will help the companies to raise the capital. the issue right now is these SMEs. Now we have relatively big companies on the board, main board, and we have the Drisavi board. But some of these small companies, the Drisavi board, even if they can raise more than about 10 million, they can come and list the company. The issue is the structural issue and also their knowledge about getting a listing. So if we can attract these companies, and then if they can, now we started this Empower board around 2 years back. Up to now, we have not seen a single company come and list company use this board and then list the company or raise capital. What I can say is that if the SMEs basically with this pandemic, and then SMEs they had a huge negative impact on because of this pandemic. But then now, right, this is the time that they need capital. This is the time that they need money. So if they can come and use this board and then raise capital, that will help the company and that will help the stock market plus the economy. So I gave a bit of an indirect answer, but then my answer to this question is basically, especially the SMEs, if they the biggest issue that we have right now because of the pandemic is the survival of SMEs. So if they can come and use this board and then use the stock market to raise capital, that will help for their survival and for their future, and also it will help the economy also.
Yeah, I mean, rather than blaming, at least use the available opportunities to come out the situation, convert this, health sector success into the economic success. Yes, that was the Mr. Tushara's idea. I think that's a very nice idea. So with that, I want to go to Mr. Sharif. Yes, 3 minutes for you to wrap up the session.
Sure, Professor Kumarasinghe. So I think the main thing is that because we have had this success, relative success, in controlling the pandemic, I think that has allowed us to get back to business faster in a more sustained sort of way compared to other peer countries, and I think the message that we have to kind of send is that basically that Sri Lanka is open for business, and I think there are certain opportunities. I think if you take even the global context of what's going on between US and China, and events relating those trade wars, and countries are also realigning their supply chain strategies, diversifying those supply chain strategies, and so on. And that is a good time for us to really leverage our relative success to basically position Sri Lanka in that environment in a positive way. Also, just going back to sort of the knowledge services industry and tourism as well. I think the fact that we've been able to control this, and lot of companies are able to have more and more amount of staff coming back into work, compared to say like even our nearest neighbor in India, who is one of the biggest industries for knowledge services, outsourcing especially. Given the unfortunate circumstances that are happening over there, they are looking at a more of a return to work sort of situation, maybe only in 2021. So that is another thing that we need to sort of leverage. And at the same time, Sri Lanka is a safe place to travel to, is something that we should promote in all our promotional campaigns around tourism. And obviously, the world is still digesting this pandemic. So, there is going to be, it's very, these things will translate, over time. And what we need to do is to leverage our this current success, not only to make it a near-term beneficiary, but also to kind of, make those the structural foundations of how we map the story for our long-term economic success as well.
Thank you, Mr. Qadhir. Always we say ladies first, but I kept you until you would be my last panelist to discuss about how we could get the maximum the success of this health sector success into economic success, what we should do. Yes, Dr. Wanaguru, it's up to you now.
Yes. Um, Actually, despite numerous challenges, the economy should take off. With the ending of the internal conflict in 2009, Sri Lanka was making a steady progress, recording about 8% growth in 3 years that followed. But progress slowed amidst the subdued economic growth over the subsequent years. But it is essential that Sri Lanka adopts sound economic policies in order to avoid this middle income trap and take off to become a high income nation with some equitable and growth. In that case, I believe that the policymakers at this juncture should focus on the importance of attracting FDIs and higher earnings from exports. These are non-debt creating inflows and they would help reducing the country's heavy dependency on foreign debt, among many other benefits. In the same time, serious attention should be given to maintain policy consistency and to have and to harness the full benefit of knowledge service sector. Also, more importantly, a mechanism should be identify and implement to improve the performance of state-owned business sector enterprises. Parallelly, as attention should be given to improve local industries while reforming the education sector to produce some entrepreneurs. I think that is the way forward. Thank you very much.
I think this is, I have got a chance to moderate many, few virtual conferences like this, but I rank this is one of the best I have moderated in the couple of, or the, in the, during this COVID pandemic period. I wish the policymakers who are in this country would listen to this discussion. At least if they could able to listen to the, maybe this recording would be placed in a YouTube. So if they could listen to this one, I think they could look back how they could shape up the policies in this country. So if they do so, I think we all could have the last nail for our coffin in a developed country, because we all know that my father's father told my father that this is a developing country. My father told to me that this is a developing country, and I'm telling today to my own kids that this is a developing country. So we could change if they listen to that one. The most important points highlighted in this discussion was that we should focus on the service sector, especially our intellectual capacity. We should think about how the port industry should, could use to the economic sector, how the tourism sector could be used further to get the foreign income, how the entrepreneurship and the attitude change should be addressed in the economy to take this country forward, and how the people in this country, especially the investors, small business holders, should use the available platforms, available facilities to make their business a success, right? So with that note, I think I would like to hand over this online platform to Tilini Navaratne, the beautiful lady. She will take this platform again.
Thank you very much, Professor Kumarasinghe. I think today we were able to listen to experts and we were able to take this conversation onto a greater height, I'm sure there will be multiple benefits, not only the people who joined, as Sir said, not only the people who join now, but so many people will benefit from it. So anyway, as we reach the closure of this panel discussion, let me cordially invite Ms. Amanda Pereira, the Secretary of the Research Center for Business Economics and Development Studies, to deliver the vote of thanks.
Good evening to you all, distinguished panelists, lecturers, and my dear students. On behalf of the Research Center for Business Economics and Development Studies of Department of Business Economics, I take this opportunity to thank all the key personalities for their tremendous support in organizing this event. Our heartiest gratitude goes to Senior Professor Sudhantha Liyanage, Vice Chancellor, University of Sri Jayewardenepura, and Professor P.D. Nimal, Dean, Faculty of Management Studies and Commerce, for the support and encouragement extended in making this event a success. We are thankful to all our prestigious panelists, Dr. Sumila Wanaguru, Additional Director, Economic Research Department, Central Bank of Sri Lanka, Mr. Qadhir, Associate Director, Acuity Knowledge Partners, and Mr. Tushara Jayaratne, Designation Director, External Relations and Capital Market Education, Security Exchange Commission. Dear Sir, Madam, thank you for sparing your valuable time to be a part of our panel discussion, and your precious insights shared today made our discussion fruitful. Also, I would like to take a moment to thank Dr. Chandranath Amadasekara, Ms. Minali Vikramasinghe, Mr. Keith Pereira, and Mr. Sunet Pereira for the assistance they provided to coordinate with our resource persons. We should thankfully remind Dr. Dinesha Sirivardhana, Head, Department of Business Economics, for her continuous guidance, and all the academic staff members of Department of Business Economics. My sincere gratitude is extended to Professor Janak Kumarasinghe, moderator of this panel discussion, for his commitment and dedication, without which we would not be able to produce this valuable outcome. Also, we are thankful to non-academic staff and technical officers for the much needed support they provided. Moreover, we are thankful to all the academic staff members from other departments and all the other participants for your presence today, which indeed added extra color to our discussion. Last but not least, I'm grateful to my team, Dr. M.K. Shriyalata, Director, Research Center for Business Economics and Development Studies, for her inspiring leadership, and my fellow team members for their untiring support. Thank you, everyone, and good night.
Thank you, Ms. Amanda.
Thank you.
Let us conclude the panel discussion by paying tribute to our Mother Nation.
Sri Lanka Mata, Abba Sri Lanka, Namo 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 Mata, Sundara Sri Darini, Surani Ati Subhamana Lanka. Jeevan
you everyone. Hope you all had a fruitful session. Have a very good night.